right. Welcome to episode 50 of the More Doors podcast. Time has flown by and we are officially turning 50 today, boys. Our first live episode, too.
Word. Episode 50.
Everything you're saying is just out there in the universe.
It's never coming back. Or it's out there forever.
No takes these backsies. I'm excited. Today, we're going to be looking back on 50 episodes and what we've learned, our key takeaways from doing the More Doors podcast and our journey building Deep Blue Capital along the way. But first, we do need to thank our sponsors. One of them is Deep Blue Capital. Head on over to Deep Blue RE. That is the home of Deep Blue Capital. And check out what we're doing over there. Upcoming projects, ways that you can partner with us to build wealth, passive income, invest in multifamily syndications with us. Check out our past projects and everything that we got going on over at deepbluere.com. And then get your voice heard over at Tor Studios. .com, the home of Tor Studios. Jesse Showalter will hook you up with all your content creation needs. So check out Tor Studios, Tore, and get yourself famous. Woo! Live episode, boys.
Bringing the heat today, bro.
Yeah, I know. I just wanted to get
this is
right
what happens
into
when you don't do the intro for 25 episodes, I guess.
It's all
You
pent
have a lot
up.
of pent-up energy.
Exactly, 100%. How's it hanging? How is everybody?
Everybody's excellent. Excited about today. I feel like this has been quite the build-up. We've been counting down like Dick Clark style for the last 10 or so episodes.
I think that this, I don't know why it is, but it feels like, so we do one other podcast that we've been doing for a very long time, and it feels like we're outpacing the number of episodes with this quite quickly. Like we're already at 50, and I think we just did 230 of the other one the other day, but I feel like we've been doing that podcast since I was 11 years old. Like it feels like we should be at episode 4,000 of the other one. So maybe we're catching up.
I was going to say something, but I won't.
Okay. Forgot that we were live. Or you remembered that we were live.
Filter.
All right. Well, we're looking back on 50 episodes. I got a lot of stuff that I want to talk about, just key takeaways and things like that. But it's been a really amazing journey because since we started this podcast, the three of us, and this is not a humble brag type of thing, but it's just a cool fact about our journey. We've acquired about $10 million in real estate since we just started this podcast.
Yeah.
So that's been pretty cool.
Absolutely.
And you know, we sat down to talk about our vision, our goals, and things like that. We had a higher goal as far as AUM is concerned. It is also true that I think when we first sat down to talk about our vision, short-term vision for the company, we were right on the cusp of entering a very inhospitable market environment to get deals done. So I think if we had really pressed to hit an arbitrary AUM goal, we would have probably ended up working really hard to do some bad deals. Mm-hmm. And I think that we did a really good job of passing on a lot of things. And so it's been a really cool journey just to look back and say, hey, in a really difficult market environment, we've learned a lot. We've also acquired about 10 million in assets. And now we're well positioned from a broker relations standpoint, a systems and infrastructure standpoint, a deal flow standpoint, to take advantage of what I believe, and not just me, I think most indicators believe, is probably a generational opportunity coming down the pipeline in the next year or two.
Yeah.
You know? And so it's been a pretty cool journey.
It's been a great journey. You know, I think one of the things that's very exciting is that I think the three of us are approaching this like building a real company and a business, not just opportunistically buying deals, right? I think we've done a very good job building a brand, building, to your point, systems and processes and marketing collateral. And, you know, I think we've gotten very active on social and you know, in the last year and a half, I think we've actually iterated a number of times on, you know, how we work together and how we stop trading money for time and delegate, right? And, you know, like last year we had thought about how to accelerate our marketing journey, or marketing arm, if you will, and kind of taken the lower cost route, and as opposed to making regular, you know, material investments. And I wish we had not done that a year ago, right? But now we're doing it, and it's paying off handsomely, right? And I think we consistently step back and say, how can we further optimize and how can we continue to do better? And I think that's what's gotten us here today, and I think really set us up for a big second half of the year.
100%. And that was one of the key things I wanted to touch on. In the beginning, just building out a lot of the infrastructure of the company, we bootstrapped it. And I have always been of that mindset. I might be the most frugal person that I know besides Nick Good, for sure.
True story.
So I always
I'm frugal on other things, but when it comes to the business, I agree, Matt. Every business you go lean in the beginning, and looking back, I don't think we should have been lean. We all had money to invest, and we should have leveraged out those points from the very beginning. And we would we be much further ahead? Who knows?
Yeah.
I think that it's the learning lessons from that to say, all right, we got to stop doing this to get in expecting, if we're going to stay lean and we're expecting a result of Z, but we're going to do it very cheaply and inefficiently, then we're not going to be happy with that result right away.
Completely agree.
It's going to take a lot longer to get there.
Yeah.
100%. And so I think one of the first things, what we've done a good job of leveraging or started to really do a good job of leveraging is the things that are not best served with our time because we're not the experts to do them, right? There are things that we do not leverage and probably will never leverage because we have, standards around quality control and what we want to do in this company. But we are spending a lot of time, I know I was, building out a lot of stuff for brand awareness and systems and infrastructure around raising capital and getting our name and image and things like that out there. The second that we leveraged it out was the first time that I realized I enjoy doing those things as more of a passion because I just kind of like putting systems together. And I realized whenever we leveraged it out to a professional, how much I was almost underserving the company because I'm so far behind what they're doing. It's incredible. And I'm proud of that. I'm proud that we made that decision. But it could have taken us forever to get to where we are from an audience standpoint. If I just kept doing it myself to try and save a buck, it's amazing what happens when you leverage it to somebody who that's their sole focus. And you realize oh yeah, my job is to go find deals and to be an expert in that, not getting more subscribers on YouTube.
Yeah. I think building up the subscriber base is definitely important, right? But I think one of the questions that the three of us, consistently ask each other and ourselves is what we're doing the highest and best use of our time, right? And you have a passion for marketing and websites and WordPress and MailChimp and all that stuff, but and doing all those activities is super important, right? But if the name of the game is finding and reviewing deals and raising capital, then to quote Ian Koniak, those are our revenue generating activities, right? Those RGAs is what the three of us need to be solely focused on. And then we sub everything else out, right? And I think, the other thing that was kind of a learning experience for me and still is we've had a number of guests on the show talking about finally hitting critical mass and being able to leave their W-2. Right. And the three of us have W-2s, or two of us do at the moment, but it'll be back to three here shortly.
Right.
we have W-2s. We're getting paid.
Man, I hope I didn't know. Where's my check?
Yeah.
Sorry, guys.
We have K1s, but you still work like a W-2 for them.
Gotcha. So, but you get what I'm saying, right? And look, we've done a couple of syndications. We've actually banked all that money, right? And I think the difference between having the ability to do that and immediately look for the right ways to redeploy that capital and invest back in the business is something that separates us. And when we get to the point where we are doing this solely full time, we're going to have a multi-year head start and a very deep and big audience and I think that's going to set us apart substantially.
Yeah, and I don't know, I don't know enough about the financials of maybe other partnerships and what they're doing, so I don't want to speak to anything that we might be doing differently. But that is just an action item that maybe you can take from what we have done. Is we take that same financial prudence that I think we exercise not only in our other businesses but in our lives as well into this company. We knew that for the first couple of years, minimum, we're not taking a dime out of this company at all.
Mm-hmm.
We're going to work long hours. We're going to deal with a hell of a lot of stress. We're going to learn a lot. We're going to go above and beyond to take care of our investors and do good deals. And we're not going to see a material return for our personal lives into the future. And
Right.
at some predetermined or some really unpredetermined date when we feel that it is reasonable and financially responsible for us to even take money out. What that is going to help us do, what it already has helped us do, is build, what Brett Tanner calls a war chest, right? We're sitting on a great amount of capital right now that we have in basically the fuel tank to start to continue to propel us to where we're trying to go with a lot more rapid velocity. What I think a lot of business owners really stifle their growth is they make some money and then they start living off that money where they're trying to make more money.
Yeah.
And it's like, if you can go without doing that, you're going to go without a paycheck for quite a while. But what will happen is when you use that as fuel, you get the hockey stick effect, right? You see a little bit of growth in your business, a little bit, and then that war chest kicks in. You figure out the systems, you figure out what you're doing, you figure out what works, and then you've got all this gasoline to pour on the fire. And that's what I'm excited that we've really started to build now, because I feel very confident in our ability to deploy our existing capital into growing a bigger audience, finding better deals, and ultimately closing them.
Agreed, 100%. And I think one of the pros about starting a multifamily investment business while having another source of income, right, is the ability to say, I don't need that money right now, right? And we talk about leveraging or using multifamily as a vehicle to build generational wealth. Well, I mean, you just said we've acquired, $10 million in real estate in the last 12 months. I get that there are people out there doing bigger. We're not, beating our chests about it. And,
Yeah, I
right?
even said it wasn't really a brag. We know people that have acquired 100.
Yeah, exactly. But, right, the three of us, we still have, we're still drawing income from our W-2, K-1, whatever we want to call it, right?
Day jobs.
So as this builds critical mass, right, when we get to exit velocity, if you will, we're not going to need to trim back and go from houses to apartments in order to sustain. Right. We'll be at a point where we can continue our quality of life without skipping a beat. And I think there's a lot to be said for that when we're focused on doing this for families.
Absolutely. And to speak kind of to that on a day-to-day basis, it takes a lot to build these organizations.
Yeah.
But I think one of the biggest things that I've learned, one of the biggest things that I've learned is it's just like any other business that it feels foreign to you in the beginning until you get used to it and you get into a groove. It's simple, not easy.
Mm-hmm.
The reality is, Nick and I run real estate sales businesses. You've run technology sales businesses for a long time. These are things that we didn't really know how to do until we did them. And we learned a lot along the way. And same thing when we started our property management company and all these types of things. They seem very unfamiliar and a little intimidating until you get into them. And you realize it's a daily process. It's infrastructure. It's basically leads in, conversion. It is what it is, right? I think a lot of people are intimidated, maybe that want to go from LP to GP or even just start their investment journey, because it feels like it's a really heavy lift.
Mm-hmm.
And I don't want to downplay the amount of time and energy it takes to build an organization. But what I will say is doing larger multifamily deals from an activity standpoint is the same general level of sophistication as running any other sales type business or business in general. It is learning to find deals, learning to underwrite them, learning to raise capital, which is mostly networking, your daily activities, and asset management, which you're going to learn a lot along the way there. And if you have great partners in property management and things like that, that should be an easier lift, hopefully, for you. And you have the better your property management partners, the fewer decisions you have to make.
Amen, brother.
Right? Which is always a bonus. But I think a lot of people never jump in because they feel like it's a massively heavy lift.
I think it's more the numbers involved. I mean, think of it from look, the stress we are taught at a school throughout school not to take on a lot of debt. Right? And even all the books, there's good debt, bad debt, whatever. But when you start looking at these numbers, 4 million, 5 million, 10 million, I mean, that's a scary number. Yeah. And I don't think a lot of people visualize themselves. They want to be successful, but they don't visualize that number. Right. And then it gets in front of them and it just paralyzes them.
Right.
I mean, I know when things aren't going well that we don't sleep well. We start freaking out about, all right, it's all this debt that can be crippling.
Yeah.
And so, a lot of people don't want to take on that risk, whether it's calculated or not. They're just like, screw it. It's not worth, the due.
But I think the difference is debt only matters if you can't pay the bill.
Sure.
Right. And what I love about real estate investing, multifamily investing, storage, right, is that, we're going to use debt, but it's managing the business correctly that pays the debt, that separates the people from being successful or not. And when I look at the three of us, we're very good great business operators and very successful in that arena.
I can say girth.
I mean, that too.
Yes. Different podcast.
Yes. That's the after six.
Right. Yes. No, you're not wrong. And to kind of even speak to that maybe more actionably, our last deal that we did it at about the same time that you just bought a new personal house.
Yeah.
Right. And one of the things that's kind of a misnomer about taking on that amount of debt and things like that is worst case scenario. And obviously, if you do good deals and you're a good operator and you work your butt off and you come up with creative solutions to problems as they arise and things like that, you should never get to this point. But on the financing side, a multifamily asset is a business. And so you really should, you have the opportunity to work through unforeseen things and things that come up. And on the financing side, it's a much more malleable conversation with your lender and things like that. There's a lot of operators the last couple of years that have had to go back to their lenders and restructure things. Fastest increase in rates in human history, those things are going to happen, right? The reason that I think Nick would even attest that it's harder to get approved for the loan for the personal residence that he just bought than it was for the apartment complex that we just bought is that if Nick can't pay his bills, no one's coming to save him. And the bank doesn't want his house. It actually would cost them more to take it back and resell it than they would probably make when they resold it. It's annoying and they don't want to do it. They don't make money on foreclosing and then reselling single family assets. Where that large amount of debt can be scary is it's because it's a big number. But the reality is if you buy right, that amount of debt shouldn't scare you because for the exact same reason, you're buying a business that should cash flow. And if for whatever reason problems arise, it is still a business. You can pull levers and make decisions and get it right back on track. I can't do that with a 3-bedroom, 2-bath, single family home in McKinney.
Right.
It is what it is. And if it's not worth what I paid for it anymore, I'm pretty much screwed.
Yeah. So you're going to buy the 3-2 in McKinney?
I mean,
come on.
I know. I need to join you guys there.
Come on.
I have convinced lady. She's like, look, as long as we're able to because I heard you're allowed to paint some houses white in you guys' neighborhood now.
Yes, it's changing. It's modernizing.
That's a big deal for her. Like a big deal. So I got to get one of those.
All right.
Who do I got to talk to over there to know if I can paint it? Yeah.
Team McKinney. I'll get you the Stonebridge HOA info.
I know of a house that's about to come on the market.
Beautiful.
But I have history there.
Are you talking about mine? I might be moving mine into a corporate rental. I don't know yet.
Oh, that could be cool.
You want to buy mine?
Yeah, I'll buy yours.
Right, cool.
Yours is way too big for me.
Not necessarily.
What's that? Yours is a 5-bedroom, 4-bedroom? You got a huge game room and a media room. I'll never use that space.
I mean,
I might.
You don't like to play games?
I like to
you
play
were just
games.
talking about your Call of Duty fiestas.
I am used to apartment living. If I have to go to a second location to play a game, I'm already out. I want to just sit and eat dinner in the same place.
You can do it in both places.
You can do
it works that way.
Okay, fair enough.
Let me ask you, recapping the last 49 shows, what's some, like, there's some easy takeaways that I have from that. What would you say yours is, Matt?
Specific like moments or specific episodes?
You tell me. I mean, just if we recap all 49, to me, and I'll let you think on it for a second because I put you on the spot.
I have 3 lined up in my head. I came prepared. I just want to clarify the question a little bit.
So I just want to see, like, what is your, replaying all 49 in your head, like what's kind of your 3 takeaways from just what you've learned? Because we use this show more. It's more about selfishly we're learning from them.
Yeah. Everyone we've had on the show that has scaled a big business, to me, has shown a level of relentlessness that separates them from everyone else that we've talked to.
Yeah.
Right. And I am obsessed with Skylar Williams' episode.
Bro.
Okay. That guy is a savage.
Yes.
So for those of you, I think it was episode 42, go listen to the Skylar Williamson episode. Here's a guy that got accepted to UMiami and West Point, went to West Point, graduated from West Point, goes into the Army, gets out of the Army, builds a huge real estate empire, takes the MCATs from the desert in the Middle East as he's serving,
on tour,
right?
Yeah.
Gets off the plane, starts at UT for his master's, has a $2 to $4 million per house construction crew that churns out 10 to 12 houses a year, 4 laundromats, a bunch of single family rentals, and runs a real estate,
one of the top
brokerage.
50 sales teams in Keller Williams, which is no easy feat.
And he said something that I think about all the time. He said, I came out of the womb as a person who was focused on excellence. Yeah. And
that's a t-shirt, Jesse.
Yeah. Like, I have watched that short probably 100 times.
Yeah.
And that mindset, that attitude, that approach to his business and the way he lives his life, you can just drop the mic and you're either going to live that way or you're not.
Yeah. 100%.
I mean, I think that episode, everything from, his donations to the teachers, his Army career, he told us he was kicking doors in Afghanistan during 2 or 3 tours, and just, leading his team. Unbelievable episode. That was by far the most impactful to me.
That was a great, that was probably the most favorite one.
My favorite for sure.
Yeah.
No offense to anybody else.
No, I mean, it has nothing to do with that other than just, again, the story behind it. Yeah. And then why he runs the mastermind and everything else. That was a great one. I mean, from an overall experience though, everyone starts out the same, right? They all start with 0 knowledge. And then they go in and either, most likely, almost all of them that I've seen so far that we've heard started out in a single family.
Yeah.
And then they started to scale. Right?
It's the same pattern over and over.
Yes. And there's a common theme, Rich Dad, Poor Dad. A lot of them cite that book. Yep. And it's just about the growth pattern. And then some just do it at a much higher level. Like if you go to episode 36, Zach Happenstall, with Rise 48. If you go look at their growth over, I think they started, if I remember correctly, 18 or 19.
Yeah, it was right before.
I think it was
COVID.
19.
And he was another guy that was working a medical job of some sort. I can't remember, while they were building Rise.
Yeah.
So it was another, talk about relentless.
Agreed. And talk about relentless. So on the show, he announced that they were moving to Charlotte. They were going to go start touring. He was getting on the plane the next day, I think, or later that day, right, to go to Charlotte and meet people. They've already closed 2 deals in Charlotte. Yeah. Right. Mm-hmm. And Zach, that episode was actually number 2 on my kind of highlight. I love what Zach said about, having $60 million in real estate and having to go back and get a job because, they needed to make ends meet. And it's not instant gratification. Right. He said something about guaranteeing the broker that sells you a deal that you're going to use that same broker to dispo the deal, and where possible, using their finance arm so they're collecting as much money in fees as possible. And then he talked about just existentially, like how stressful it's been on him the last 18 months or so during this downturn, and how they turned 2,000 units in order to raise rents in order to offset, the increase in fixed costs that they ran into in their portfolio. Like, holy crap.
Yeah.
Right?
Like,
unbelievable.
And again, like they started Rise, he realized it wasn't going to be instant gratification, went back and got a job and was still doing this at night. Pretty impressive. And I want to add to just this overarching conversation around relentlessness with a little bit of, maybe actionable guidance. Part of the relentless nature of building these businesses, I have this mindset. I know you guys too, like, my mindset is just move forward every day, right? Like, you're going to have better days than some days. Some days are going to be better than others, but do something to move forward every day. And eventually you're going to find a groove. You're going to find momentum. You're going to have a lot better return on time as you figure out what works, what doesn't work. You make mistakes, you fail forward, all that type of stuff. When we use the word relentless, I like to key in on that for a second, because one of the things that I think gets people stopped before they really start is they feel like this idea of doing big things and being relentless, it's got to feel really exciting and action-packed all the time. And the reality is, there's a good majority of the relentless activities that you need to do to build these businesses that is super boring, right? Like the amount of deals you have to sit in front of the computer and underwrite before the light bulb goes off and you feel, there's an opportunity. That's actually the relentlessness that most people can't tolerate. Most people, and I learned this from a mentor of mine years ago as we were really building our sales team, most people can't tolerate the monotony and boredom of success. And in a lot of ways, one of the ways that you need to be relentless in this business or any other is you've got to be able to do the same thing over and over again every day without going insane, which is the definition of insanity. You've got to be able to do the same thing over and over every day, just looking for that little bit of an incremental result.
Right.
And then all of a sudden you build momentum that hockey sticks. But you've got to do a lot of raising capital is the same way. You got to hear a lot of no's. You got to have a lot of conversations. You got to do a lot of things. We calculate it's about 60 investors before we raise $1 million or something like that. I mean, it's conversations, right? Underwriting 100 deals you're probably going to underwrite before you find 2 or 3 that you might get an LOI that gets accepted, and you're not going to close every single one of those. There's a lot of monotony in that relentlessness. And I think that's what stops a lot of people is they think that when it gets boring, they're doing something wrong.
Yeah.
And that's a huge aha moment for me when I realized that, like, being consistent in the activities,
but being patient.
Yes. Patient is good. Yeah.
So think of it like, and I'm scrolling back through the episodes to rejog, like episode 12, Kaylee, the apartment queen.
Yeah. Great one.
Right. If you remember, she hadn't, when we had her on, and that was let me see, when was that released? September 6th of last year. She had not purchased a property in a while.
Yeah.
Right. But what she was doing was gearing up her investors and continuing adding to her database. And I think she has a really large investor database.
She does.
But it was strategic in a sense of she wasn't going to strike and buy something right then and there, but she was priming them to say, hey, when an opportunity comes, they need to be ready. And what she did, I would like us to see, because most of our investors are male. If I go look at it, I can't think of really.
We have couples, but we don't have
yes.
a lot of individual.
Correct.
So I think I had 1 or 2, and we had 1 or 2 in the Haley, and 1 or 2 with Fellowship.
Less than 10%.
Yeah. So in her whole goal is to empower women to understand this and invest in these opportunities. Yeah. And I mean, that would be a cool drive and an initiative to put in place to start working on how do we as 3 males really appeal to the female investor at a high enough level so that we can show them the opportunities that Deep Blue is bringing on.
And what she does a good job of, and maybe what we can even kind of take away from that, is like she makes a point, obviously, of targeting that avatar. And I don't think a lot of syndicators really do that. When you look at raising capital and when you look at the outreach and audience building, like it is very much like keyed towards 30 to 60-year-old male accredited investors. Like if you were to talk about the way that people do things like webinars or run ads or throw events or things like that, the accredited female is a blue ocean for most, deal sponsors. And she's done a really good job of keying in on that. And then coming from a lot of contribution. Like she comes from a lot of contribution as far as her education, what she does. Like it's not just about her. Here's my deal.
Right.
She does a lot of really great educational type things, and she's become an attractive, like an attractive character, as we call it. You know, rather than making it all about her, she comes from contribution. It's worked out really well for her.
Well, I'm gonna just correct you on one thing. Okay. I think Kaylee's mission is to empower women to become investors.
Yes.
And I think there is a huge difference between a job or intent versus a mission, right? Like I think it's almost like, I don't want to say religious, but it's almost that committed.
It's
right?
obsessive, but not in a bad way, but like for sure.
Exactly. She goes to the market with the intent and passion around educating and empowering women to invest in multifamily real estate. And I think that's what's made her very, very successful and frankly, a very differentiated voice. Yeah. And she said something on her episode, like everything goes through someone else. And I think she even joked, like we all came through a woman in order to get into the earth. Right. But she's very right. In everything that we do, whether it's getting a broker to entertain our LOI, award us a deal, right? Convincing an investor to participate in one of our opportunities, that happens through another person. And you've got to, people need to know, like, and trust you. You need to have credibility, the whole thing, but you also need to relate to them as people. And I think Kaylee's done a very good job in the, accredited investor, professional women community. And I wish her all the luck in the world. We got to have her. I didn't realize that was almost a year ago already. We got to have her back on the show soon.
Right. Almost a year. Wow. That's 100%. And to that end, I mean, this kind of came to my mind, and I was going to talk about this anyway as one of like my key takeaways over not the last 50 episodes, but our journey along the way is she has great comfortability with her audience. And I think that's something you build over time. This is a slight dovetail, but one of the things that I have learned along the way, we have lead generation based businesses in all of our other businesses, our sales teams, all that type of stuff. We are, all three of us here are phone dogs by nature. Like that's how we've built our careers, is being on the phones, talking to people, trying to convert, all that type of stuff. And I took that same mindset for a long time into raising capital as well. It took me a long time to realize and feel so much more comfortable with the difference between something like a real estate sales business where I'm trying to show more value than the next guy. That's really my job. And to follow up. Those things exist in the capital raising world. But the reality is, if I do my job on the front end to underwrite a great deal and negotiate a great deal, my whole mindset around raising capital has really evolved because I love providing opportunity for people. Mm-hmm. You know what I mean? And when you start to get that to click in your head, raising capital becomes so much more fun. It's a privilege to be able to contribute to the well-being of other people's financial future by doing your job to find them great deals and then offering them the opportunity to be involved in them, right? And I was taking such a lead generation mindset into capital raising for a long time that I think had me approaching it the wrong way, and that's really evolved over the last year or two that we've been doing this. That's just been a big takeaway.
It's truly relational.
Yeah.
Like we're asking people to write $50, $100, $250,000 checks.
Yeah.
And that doesn't come as transactional. That comes as very relational and getting to understand why they're doing it. Or if this is their first time, the fears that they have.
Yeah.
Because, the hardest thing to do is get someone to part ways with their money, especially in an asset that, they are in an ownership group, but they don't have control over.
Right.
And, that's the whole point of this, is to be able to leverage out your time and to have tax benefits, and then to have, cash flow, and then to have the disposition to where you're getting that large lump sum back in 3 to 5 years.
Yep.
And, it's about educating. It's about making sure that once someone agrees to investing in a project, especially with Deep Blue, it's the continual on relationship part of it. And it doesn't stop there.
Right.
Yeah.
Right. We're now together for the next 3 to 5 years.
Yeah.
Minimum.
Yeah, at minimum. And it could be in multiple projects, and hopefully it is. And so this isn't just a one-off opportunity, the way that the real estate business, traditional residential real estate business is like, I help you buy, help you sell. The chances are, if I do a good job, maybe you come back and I try to stay in touch with you, but we're not tied at the hip money-wise for that long.
It's a different mindset. Like you even used to call yourself in your residential sales business a one-night stand.
Yes.
Right? Like you're really bad with the follow-up after closing and generating multiple transactions. And we could be, because as long as I'm hitting the phones every single day, business is going to come in. That's just my job. This is a totally different animal. We're actually offering something much more tangible than we can. The thing is, I fully believe in what we do on the real estate sales side. I believe that we've built great businesses, and we make people more money or negotiate better deals than other people. I believe both of our organizations do that at a very high level. But what we're talking about here is a totally different opportunity than just selling or buying one single family transaction that's a personal home.
Right.
So the relationship aspect is huge.
I agree. I also think, though, that there's, we've talked about this concept of transferable skills on the show a number of times, right? And I believe, and I've gotten feedback, right, from folks that have participated in some of our opportunities, is that when they look at the three of us and they look at our track record, right, that they have confidence in us being able to execute on our business plan, right? That to me is huge. And there's plenty of people that have become very successful in real estate that have come from non-sales positions and non-entrepreneurial positions and stuff. But I can only imagine it's more difficult for them to prove credibility because maybe they haven't grown a business, right? And when I think about this from like a technology sales perspective, which is what I've been doing for the last 15 years, right? You have to prospect or create demand. You need to show your product. You need to build trust with the buyer of that product before they sign. You need to set expectations on what the product will or will not do, only to then to get them signed. But then you need to execute, right? Enterprise software is not easy post-sale. Complex implementations, complex workflows, tons of nuances, involvement across different departments, all that sort of stuff. That's really where the rubber meets the road. Closing the sale, arguably easier. Delivering on your vision and the mission, that's the work.
That's where clients probably in your world get the most frustrated, and they lose maybe that euphoric feeling that you're solving their problem.
Yeah.
And now they're like, it feels like, now you've created more of a headache and more of a problem for them. And why did they agree to this?
Exactly. Yeah. And I think what successful technology salespeople, Ian, Chris, myself, right, a whole host of people that I know, is they set the proper expectations pre-sales, and then make sure that the value that we assured the customer that we were going to deliver gets delivered, and that they're setting the customer up not just be content with the initial transaction, but for cross-sells and upsells downstream, right? And I think there's a lot of similarity in that to what we do. And I think if you look at a lot of operators out there, look, 2020, 2021, the market was hot. Syndication was like the cool thing to do. Joe and Susie, who did 2 multifamily transactions, are all of a sudden selling $25,000 coaching programs, and everybody buys into them, and then, you're starting to see, distressed deals. And it's the ability to deliver the vision and execute the vision, not just be great at marketing, that separates people that are going to be in this business for a really long time.
Just to harp on that sort of last part for a second, one of my big takeaways we really, I've been an LP on a lot of deals before I became a GP, and so I've seen not only both sides, but coming into the market environment that we kind of saw for the last 18 to 24 months, I actually feel very blessed because my first introduction to really operating at a high level and being a deal sponsor and getting deals done, I was also learning in real time all of the difficult lessons that other deal sponsors were learning on deals that I hadn't done yet.
Mm-hmm.
It was like learning about adjustable rate mortgages, like right in the middle of 2009 when everything was blowing up. And you're like, oh, well, that makes a lot of, like I came in as a GP, and I was knowledgeable as an LP. I've been learning, and my education stretches back since the beginning of my real estate career, but I didn't have as much hands-on experience until I became a sponsor of our first deal together, watching deals blow up that had bridge on Class A assets that didn't need any heavy CapEx lift. Watching things like that happen, it's cut the learning curve going forward of like, I've already had a front row seat to so many difficult lessons that I'll never need to learn the hard way. And I feel very blessed for that.
And by the way, we've invested in some of those.
Oh, that's where I was kind of going with that, is like on the LP side, we're having to figure some of that stuff out. It sucks to have your money tied up in them. It sucks even more to be the guy that did the deal.
Yes.
And so I feel very fortunate to come into the realm in the last year and a half that we've been doing this, because there's a lot of knowledge to be found right now.
Totally.
You learn a lot less in really stable market environments. There's just not enough going on.
Yeah.
There's a lot of lessons to be learned right now, and I feel like we've taken a lot of advantage of them.
Yep.
And I feel that, we've asked the guests to share some of their, there's a lot of tough moments going on right now. There's a lot of stress that they're running through. And many of them have been pretty open and transparent and shared on the show. And they're probably even downplaying that a little bit because it's going to be out, into the universe out there. And so you're probably only getting just the tip of the iceberg of how much stress, or maybe how in trouble that asset may be, and they're working on turning it around.
Yeah.
And, as an operator, you're not just investing, you're investing in the operator, right? You're not just investing in the business, and it's how the operator acts. And literally, I was in a deal, I was a GP on, we just sold that asset last week. And, when we ran numbers on it, for the longest time, every update was not a good update. It was not good. Right. And involved a partner dying. It involved, interest rates going up. It involved low occupancy, bad debt. And then
it was new construction. So prices of material.
Yeah. New construction. So it was over budget, and anything that could go wrong with that, it did.
Mm-hmm.
Dispo the asset last week. And as we're running the numbers, it appears at this very moment that first and foremost, the investors are getting their money back, which is always a win.
Yep.
And then it looks like that we more than likely have come close, or we've hit the pref, the preferred rate of return. Yep. And so out of all that the trouble and you as a GP, you over scrutinize everything. Mm-hmm. That, Matt, you use this, like you wake up at 2:30 and you're thinking about the assets, or you're thinking about, there's something that's causing you to wake up. Trust me, I've been through that for 3.5, almost 4 years. And then you sell it and you're like, all right, that's gone. It's a relief. And you've been able to deliver at least that investor's money back. They've got the tax benefits from it. And if you can give them the pref or close to it, you've won for them.
Yeah.
And you've done the best of your ability to protect that investor's money the way that you're protecting your own.
Yeah.
And it's a pretty good feeling.
Absolutely.
In general. And I will tell you that that every investor that I've talked to that was in that asset, they have been nothing but supportive. And you would think that when people have their money tied up, then they would be, a lot meaner.
Yeah.
And so again, as long as you're being good stewards, and that's what it is. And you kind of pick up on that from the majority of the people we've had on the show. I mean, it feels that most of our guests feel and operate the same way.
Yeah.
100%.
Yeah.
And you guys did a great job of, we managed those properties, our company did, and we got a front row seat to just everything you guys worked through for the last few years, right? And you guys did an amazing job of solving problems as they came up, anticipating problems and solving them as they came along. And one of the things that I want to harp on for a second and just parlay when it comes again to how complicated these businesses can sound and how big these deals are and things like that. It's great that we work in a space where you have the opportunity to solve problems like that and get a great outcome, which is actually way more difficult on a smaller scale. Like Nick and his partners went kind of through hell to get that deal done, but they had options to figure things out, pulled levers, and made things happen. That's a blessing compared to, on a very small scale. One of my Airbnbs on a Saturday night, my water heater just totally effed up. It drained everywhere all over the house when I had a guest in there. Couldn't get an emergency plumber out there. Like, what do you do there?
I think we were at Harvey's house eating brisket. That happened.
Yeah,
right?
you were there, right? Like, what do? You don't do anything. You lose money. You get a negative review. Your things stop booking for a while. You get a lot of damage to your house. It sucks. Great. The house only cost $250,000. Was that a better investment? I don't have the ability to solve problems really very well in that space. And so the numbers are bigger. Yes. The opportunity to operate it like a business and solve problems is way greater. That's what I love about this business so much.
I love it. And I just want to kind of pile onto what Nick just detailed about his experience with that deal. First off, congrats on the successful dispo. I know that was in the works for a long time.
Yeah.
Right. But there's a lot of people out there that probably would have just thrown their hat down given the obstacles that you and the rest of the team had to overcome, right? Loss of a key partner in the deal, construction cost, a global pandemic slowing down permits and all kinds of stuff, right? Like at some point you're like, holy shit.
Yeah.
What else God, what else are you going to throw at me on this thing?
Taxes and insurance.
Oh yeah.
That's the next thing.
Yeah, that's taxes and insurance. Sprinkle that on top. Right?
Yeah.
And you made it through. And look, I think there's a big difference between return of capital versus return on capital.
Yep.
However, right, when your investors see like, dude, you just took this on the chin for the last 3 years, and I'm sorry for all my nastygrams, right? Where you got us out in arguably the worst part of the market cycle that we've seen in years, and sent me back some money, right? Go get a massage.
There's a good analogy that when the wing gets hit by lightning, the passengers don't care which airport you land at.
Oh, I like that one. Did Tom teach you that?
I just made that up. Can you imagine? I'm like full of gold right
That's
now.
another t-shirt, right, Jesse? I will also say, going back to just reviewing these episodes, I'm going through the list. 47, Matt, you were on the beach somewhere, and we had Kiyoshi Simon on.
No, I was there. I was there for that.
It was me and you. Brian was here. You were riding whales.
Yeah.
Which we're going to come back to before the end of the episode.
Yes. And that one, he's a CPA.
Yeah.
And I thought that was going to be, honestly, like the most boring show ever. And number one is he did an amazing job of not making, tax strategies boring.
Agreed.
And made it easy to understand and easy to digest. Because when you really think about it this way is if you have this good problem of you have a lot of money coming in, your disposable income coming in, and it is a full-time job and makes your brain go numb trying to think about how to do some tax saving strategies.
Jake Hinder made a post about this that got a little heat, but he's 100% right.
Yes, and it's the biggest theft of wealth is taxation.
Yeah.
And regardless of what you believe about it, is there's these laws in place for a reason. And so Kiyoshi did an amazing job on that. I would say go and listen to that one first.
47.
I mean, that was episode 47 was amazing.
Yeah. And by the way, another guy that has hundreds of millions of dollars in assets under management and started off as a house hack.
Yes.
Yeah.
Right. How many times in the last 49 episodes did we hear someone get started in their real estate journey with a house hack? Right. Zach, Kiyoshi.
Yep.
I'm pretty sure a couple others.
Yep.
Right.
Yep.
So maybe 10% of our total episodes outside of the ones we did by ourselves were house hacks.
Brian, it's time for you to house hack.
Is that what I need to do?
Yeah. Just ask lady if she approves.
But there's no duplexes in you guys' neighborhood, so it'll just be like me buying a house, and then I'll just have to Airbnb one of the rooms, and we'll just have roommates coming through.
Kiyoshi didn't have a duplex. He just had people renting out rooms.
He just had room.
Yeah.
He got like a pad split and lived
He made
in
his
it.
own pad split.
He made his own pad split. Maybe my wife would love that.
Yeah. I mean, and I think they shared one bedroom.
What's
that's weird.
What is it, Forrest Gump, where he talks about all the interesting people he met when he was a kid and didn't realize that his mom was sleeping with all of them. Not relevant, but still made me think of that.
I mean, going back and looking at all these, the shows are just freaking amazing.
Yeah.
I mean, episode 48, the one we did with, we had a legit medical doctor on.
That was cool.
Yeah. Dr. Byrne.
Dr. Byrne.
Right.
We got to go out for drinks with them. We are exchanging emails right now.
Yeah.
Here in North Texas as well. They were really awesome. I mean, going back to it, what I've really enjoyed about having the guests, and we've gone back and forth on this because this podcast is also kind of part of our brand for our organization and things like that. We've gone back and forth on how many guests we should have. And I've learned so much from our guests, and some of the lessons that keep coming back. We always have the guests tell their stories, and the prevailing theme of all their stories are they started somewhere, they had a vision, and they kept moving forward, right? I don't think we've interviewed a single guest that hasn't royally effed something up at some point, that hasn't had a huge setback, or that hasn't just been lost at some point. We've been really blessed to have this whole long case study of people that had adversity, pushed through it, and we don't have a lot of guests on the podcast that haven't been like that, because there's a lot of people that get started and really never get anywhere for those exact same reasons. So that same prevailing theme of continue to move forward. I know it sounds so simple, but it's been such a common denominator of the people that we've interviewed that we've made friends with, and I have nothing but the utmost respect for.
Agreed. I think one of the things that when I think about the episode with like Sam Silverman, which is hugely influential,
Baller.
right? Zach Happenstall, Aunt Zach Ray, right? Tony Castronovo, Kaylee, Skylar, Brian Mayoral, is I feel like all those folks constantly ask themselves, what's next?
Yeah.
Right? I mean, Sam was an SDR making a shit ton of money as a junior salesperson, became a top producer, and now he runs his own mastermind. I think I heard that he's got like 150 members of this mastermind now, right? And I think Sam's raised like 70 or 75 million by himself.
And his mastermind's only like 8 months old.
Yeah.
Yeah.
Right. And I think they constantly reach for the next rung. They're asking themselves, what's next? How do I offload some of the things that I'm doing now to focus on the next thing without losing, without stopping any of the plates from spinning, or doing your best to, right? And I think that's super key to scaling in this or any business, constantly looking at it and saying, what's next?
Yep. 100%. Good question.
What do you feel?
Jesse put that up there.
Yeah, I was going to say, what do you feel that the future holds for us, though, as a whole?
Let's go this way.
Oh, why do I got to go first all the time?
I like your voice.
Look, I think that a lot of the assets that we have right now are moving in the right direction. Some faster than others, but we're moving in the right direction. We've had to pivot a couple times already, and that's okay. And I think we're doing that in relatively short order. So I want to make sure that the portfolio itself stays healthy. I think we've made a lot of investments in just the last couple of months to increase our branding.
Yeah.
I'd like to see us do another $8 or $10 million transaction before the ball drops this year, making sure obviously it's a good deal that's going to continue to deliver for us. But I don't see any reason why next year we can't do 25, 30 million in acquisitions, right? And close out our first 3 years together with a 60 or $70 million portfolio.
Sure. 100%. I appreciate somebody putting numbers to it, because I always am, I'm hesitant to put numeric goals to things just for whatever reason. I'll put my vision this way. We've all built organizations before, and especially the other businesses that Nick and I are involved in, they all started from things that we had no idea what we were doing in the first place, right? Like when I got into real estate, I was a bartender. Nick was a pizza delivery guy. We didn't come from a cloth of like running large scale enterprise businesses, and we failed a lot along the way. We learned a lot along the way. We've had ups, we've had downs. The residential real estate space is a great example last few years. A lot of ups and downs, and we've persevered. And when we put our mind to something, it's not that we are just relentless about building whatever it is. It's that I believe that we genuinely have a passion for what we do, and that I think that we have an idea that we're going to do it better than other people do it. It's the entire basis around one of our other businesses, our property management company. I actually am kind of the bottleneck there sometimes. I want to scale so badly that I get in like screaming matches with our president around the service that we provide and how we can automate certain things. And she refuses to sometimes, because we're going to be better than the competition. And I say all of that to say, we've learned how to put infrastructure in place. We've learned how to build businesses. And I believe we have a genuine passion for being better than the next guy. I don't think there's any better place right now and for the next few years to deploy that mindset than the multifamily space, especially here in North Texas. And so numeric values and things like that aside, I think it would be criminal of us to not bring that mindset to Deep Blue Capital and build something incredible, because we've done it in other areas, and I am massively passionate about doing it here.
Agreed.
I like it all. And the way that I see it is I like that, like you said, Matt put a numerical number on it. I didn't have that in my mind. I'll let Matt run the show on that one, but it's 2 to 3 deals a year.
Yeah.
Right? 2 to 3 deals a year, and really connecting with our investors. So, because at the end of the day, we aren't going to buy these unless our investors are part of this. And so it's about understanding how are we helping them, put them in the best position to win for their investment holdings. And as long as we're doing that, then we're going to be able to buy assets, 2 to 3 of them minimum a year. And in the next 3 to 5 years, I don't want to fast forward because I don't want to get any older anytime sooner. But then the exciting part will be as we start to dispo and sell these assets, and the windfall that has. Yep. Because right now, I will tell you, there's times that it's like, man, this sucks. Right? You're just getting kicked in the teeth.
Yeah.
And like Matt mentioned earlier on the show, we're not getting paid right now. Like there's money sitting in the bank. We're not taking. It's not like we're going on luxury vacations and using this. This is long. Yes, we're playing the long-term hold game for all of us, and not using instant gratification, so that it helps our investors win. It puts the business in the right way to hold.
Yep.
Especially if there's any type of downfall.
Sure.
So 2 to 3 deals a year, and if those are $10 million a pop or more, even better.
Yeah.
Right. And just connecting with these investors, because that's one thing that I do is the ones that if you go sign up on deepbluere.com, you're getting a phone call from me.
Yeah. And
it's an intro. Sometimes if I'm able to right then, it's within seconds of you coming on, they're like, holy smokes. And we just want to get to know your investment strategies. We want to get to know, why did you sign up on this? What are your intentions?
Yep.
What are you looking to do? And are we the company to help facilitate that or not?
Yep.
And if we're not, that's okay.
Yeah.
Right? Because we don't have to do it better than everyone else. We just have to execute our game plan the way that we know how, so that we're good stewards of their money, and that we're going to help them achieve the investment goals that they have.
Yep. Agreed.
100%.
And I think that's what really makes us unique, right? Is going back to transferable skills and business experience. Is we're not going to be a fit for everybody.
Yeah.
Right. Multifamily doesn't work for everybody. Some people can't lock up capital for 3 or 5 years.
Yep.
Right. Some people need different objectives and to meet different goals and stuff, and that's okay. Right. I'm a big believer that we should be qualifying out more than we qualify in. But go smash that Deep Blue RE button,
please.
get a call from the bear.
Do it.
If you answer his questions right, he might growl at you, which is fine.
If you answer them wrong, I growl.
Yeah. I mean, he turns into Winnie the Pooh. Just talk to him nicely.
Just depends on what kind of growl you're looking for.
Oh, man.
Before we wrap up.
Okay.
Before we wrap up, you said on our last show that you came back from an Alaskan vacation. And I asked you specifically if you rode an orca. And you said no.
I did say no.
I found a picture from your cruise ship of you riding two different pictures of you riding an orca.
Wow.
So I think we need.
Are you able to put this up?
I'm going to frame those, bro. Like,
please do.
Jesse,
Just got to go up in the deep blue offices.
Look at this thing. I mean, that is accomplished orca riding right there.
Dude, I've got great form, man. I look like most people look terrified when they're riding. You're just trying to get your 7 seconds. I got a smile on my face.
You got the cowboy suit on there.
I picked it up pretty
Ride him,
naturally.
cowboy.
Oh my gosh, that is hysterical.
Jesse, I think you have to upload it. So it's what we'll do is here. All you have to do.
We'll put it on the YouTube version.
The YouTube version. All you have to do is go to deepbluere.com. And what I promise that I will do is I will send you Brian's photo of riding those two orcas.
There you go.
And you're doing it one-handed.
Yes.
Yeah. That's how you got to. I don't think you get points
for
doing it two-handed. Those are the rules.
Yeah.
This helps you keep your balance.
Yeah. So go to deepbluere.com, sign up for the newsletter. You'll get a call from me. So put your right phone number, please. I don't have to skip trace that and find you. Yeah. Then if you are on YouTube, like Matt says, smash that subscribe button. On any of the podcast listening devices, Spotify, Apple Podcasts, go leave a review, or on Spotify, it's just hit 5 stars. That way we're able to get more traction and we can get our guest up. And then if you have a good guest, or if you want to be a guest, reach out to us.
Yeah, shoot us an email, office@deepbluere.com. We will respond. 50 episodes, boys. Congratulations.
50. Finally happened.
Well, we'll see you next week for 51. Thank you, guys. Tourstudios.com. We are out.